everyone, and welcome to episode 6 of the UnPACing Alpha podcast. I'm Sebastian Lander, portfolio manager at Pack Capital,
Hi, I'm Derek, investment analyst at Pack Capital.
and we're very lucky today to have Vimal Gor with us from Trovio. Welcome, Vimal.
Thank you. Thank you for having me today.
Brilliant. So maybe we'll just start with, who are Trovio and what's your role there?
Trovio is a hybrid technology asset management company. We have three verticals. The first one is technology, and that's about tokenizing assets, whether it be digital assets, carbon, anything around that space. So we can take an asset, put it on blockchain, put it on digital registry. And so that's the first vertical. Second vertical is ventures. So we look for portfolio companies which we can engage with, that we think we can add value to, and we can introduce into our network. And then we also have a project within that labs business, which is around a longer term view on the commodity markets, where we believe that all commodities will trade net zero carbon. And so we're building infrastructure to provide that to the market, which is a long-term project, which we're very excited about. And then we have asset management, where I work. And that's the asset management business is traditional finance. So we have an alternative risk premium product that I used to run when I was at Pendle. We're in the process of launching a bond fund. And then we have a traditional finance side, and then we have digital. And all digital, we have a systematic beta fund for digital assets. So it holds Bitcoin, ETH, and then altcoins. And then we have a market neutral fund as well.
Okay.
So the whole point is we want to be a stepping stone for clients into the new ecosystem.
Yep.
Yeah, and that I'm a very strong believer, and the reason I moved to Trovio from Pendle was around the changing ecosystem in the market and the way that clients will engage with it. And so it's really about coming over, building institutional grade product.
Okay, great. I mean, there is so much to pull apart there, but maybe we'll sort of start. I guess you sort of mentioned that you were at Pendle for a long
Mhm.
time, and there you were sort of head of bids, and you were sort of, I guess, known as a fixed income investor.
Yeah.
So, how did you get interested in crypto? Why the transition to
Mhm.
crypto? And then obviously, there's a big pivot in your career, moving away from bonds into
Yeah.
that space, and maybe finally, why Trovio?
I've spent 14 years, I think it was, at Pendle. I grew that bids team. And I think when I left, we ran about 22 billion. It was kind of a natural progression for me. I've always believed that you need to evolve investment processes for the market environment's changing. Now, it doesn't mean you have style drift, but you need to move processes and strategies forward all the time. And so as bond yields fell, the yields fell, and they became less efficient and effective at diversifying the portfolio. We thought about new ways we could build that defensive suite. So the first thing was we started looking at volatility as an asset class
Right.
and trading volatility. We launched a vol fund. And then it was about, well, new assets, new ways we could build defensive portfolios. And that's what the Alt D product is, the alternative risk premium. So we built that, and that product just takes in return streams, and we run an asset allocation process. So it's an absolute return product that's targeting 10 to 15% per year, but with convexity. So it's
Right.
we think of it as like a new version of a defensive. So before, you would buy fixed income and hold it up against your equities, and fixed income did that great job because it gave you yield plus it gave you protection. But as bond yields become less effective in doing that, you need to think about new ways. We built this alternative duration product. And now the alternative duration product, it just takes return streams in. So you can see crypto as just another return stream.
Right. Okay.
Yeah. Now that's morphed now because you can think about the digital asset space as an investable universe of assets you can buy, a new ecosystem, and that's Bitcoin, Ethereum, and all the other coins. And you can also think about it as changing the face of traditional finance, and that's about the tokenization of assets.
Right. Okay.
Yeah, so tokenizing fixed income, tokenizing equities. As the world moves from analog to digital, central banks introduce central bank digital currencies, and we can move towards atomic, instantaneous settlement of assets and assets transitioning onto blockchains. Well, that obviously is a massive change for the market, and it was something that was really interesting to me, and I wanted to get involved in.
Yeah. Right. Great. So, why Trovio? That they came looking for you, or you sort of sought them?
There's very few companies in this space in the Asia Pacific area. There's
Okay.
lots in obviously the US and in Europe, but in Asia Pacific, there's very few companies who have who have the longevity and the reputation of Trovio. I know the guys there very well,
Okay.
known them for a number of years. Most of the guys are ex-JP Morgan. And when I was exiting Pendle, we went around and looked for partners to take the new fund into, and Trovio just offered an opportunity that we couldn't get anywhere else. It was an opportunity to run traditional finance, but also have the tech knowledge like in-house, and we're having to go and try and find it externally.
Yeah.
And
Okay.
that makes us incredibly differentiated and
Mm,
unique in this space. And I think that's what gives us, you know, a great platform we can build on.
great.
How did you initially get interested in crypto?
Um, I think, like everyone else, it was just, I'd seen the market evolve. I'd seen Bitcoin, as a rates guy, managing fixed income for nearly 30 years now. The idea of Bitcoin really intrigued me because it was a response to the GFC. It
Mm,
was a response to the increasing size of central banks' balance sheets. It was a response to, the debasing of the fiat currency system. And so obviously when you see something that, I'd worked in, traditional markets all my life, and I saw this product coming out, which was not antidote, but like an alternative to that space. Well, that intrigued me, and then obviously the price action was really interesting. So I started, as I'm sure you know, if you work at a traditional finance firm, you have lots of personal dealing rules,
mm,
and you don't generally, you don't trade anything PA that you can trade for the funds. Whereas I was allowed to trade crypto PA
right.
because we didn't invest in it, and so I started getting involved personally, and then just really caught the bug.
Mm,
And it's a different asset class, but it's so interesting. Like it's different because it runs on different rules. The way that the assets trade is very different in terms of their exponential functions rather than linear functions.
mm.
And I just found it interesting after doing rates for again nearly 30 years. I hate to say it, I was getting a bit bored of it.
Yeah.
Like
Right.
there's only so many mornings you can wake up and look at the Bund or treasuries and see they've moved 3 basis points. So suddenly you've got an asset class that's moving 10% a day,
Yeah.
but it's exciting again. And then I was thinking, well, how do I transition over to it? And then the whole tokenization of assets. I started looking at that, understanding how that might play out in the future. And I thought, well, there's a very strong use case here for these assets, and hopefully my skill set can meld with that
Mm,
quite well for clients.
okay. And then I guess what sort of I mean, or maybe we'll just start with I guess personally, what sort of
Hmm.
coins are you trading? Derek does invest in crypto as well. Maybe you
Okay.
guys can share some ideas. But I get, yeah, where are you sort of personally investing in the sort of larger, well-known
Yeah.
coins or some of the smaller altcoins?
This is super interesting. So we have a very strong technology business, and the guys will look through the altcoins and look through the code and actually determine if a project has value or not.
Okay.
For me, I don't have that skill set. There's a huge amount of money to be made in idiosyncratic coins, in small coins which can do 10x on the day or something for some reason. But I don't have the skill set to know
Right.
which ones are. I don't have that ability to read the code and understand the use case and where they fit in the ecosystem. And the other point is that, as I mentioned, the space is exponential
Mm,
in terms of the value of a coin comes from its use case and its network effect. And so the more someone uses it, the more network effect, therefore, the more it should go up.
right.
So actually, it's very different to traditional finance in that the big coins should move the most. Now,
Mm,
obviously, the small little idiosyncratic coins, you buy them, you could lose all your money or get 10x
yeah.
overnight, but the big coins should just accelerate and appreciate as adoption increases.
Right.
So for me, I actually don't, since I've started Trovio, I don't trade any PA anymore.
Oh, okay.
I
Yeah.
just invest into the digital asset fund at
Of
Trovio.
course. Yeah.
And so we run that, and that's a systematic beta fund, and I just have all my exposure in that
Yeah.
vehicle now.
Okay.
So yeah, and that vehicle has Bitcoin in market weight of roughly 50%,
Okay.
ETH in 20% roughly market weight again, and then it runs algorithms to determine the remaining 30%, and that can either be in Bitcoin, ETH, cash, or a series of altcoins.
Yeah. Okay.
Yeah, so it's kind of like it's systematic beta, smart beta. if the market's falling, well, it'll be in 30% in cash. And so it will give you a little bit of buffer.
Mm.
If the market's going up, you generally find altcoins outperforming Bitcoin and Ethereum. And so you get a little bit more juice on the upside. So we spent a long time building the products and I'm very happy. So I just have my own exposure through that now.
Okay. And I mean that product sounds very unique. Is there anything like that on the market in Australia or even globally?
I don't think so. I mean, there's lots of individual coin funds. So you can buy, Bitcoin ETF,
Okay.
in Switzerland or Canada. You can buy Ethereum funds, you can buy altcoin funds. Or you can buy a lot of the funds that you find in the market are multi-strategy funds. They have some staking, they do some ICOs, they do a little bit of venture, they do a little bit of directional, they do some RV, and they put all of these strategies together into one digital asset product. And then they generally charge a hedge fund fee for that product.
Yeah, okay.
So it gives you exposure to the whole ecosystem. Whereas I come from an asset management background. Most of the guys in this space are generally bankers,
Mm.
and most they're either investment bankers or they're ex-traders, and most of the traders are FX options guys.
Okay.
Yeah, whereas I'm an asset management guy.
Mm.
So my whole job is building product, building process, transparency, these kind of things, structuring.
Right,
And
okay.
so I look at the space and say, well, in traditional finance, we have all these different funds, whereas in crypto we just have one, or digital assets we have one. Well, we should have numerous funds. We should have a systematic beta fund. We should have a venture fund. We should have an RV fund. We should
Mm.
have a market neutral fund. So that's the way we're approaching it. So we have a systematic beta fund, and then we have the other funds, and we don't charge hedge fund fees on it.
Okay.
So, I believe this is the only product like this out there. And we've built it for the institutional market. So wholesale investors, institutional, it's for the big end of town.
Okay.
We could take 100 million subscription into the fund tomorrow.
Wow.
Whereas a lot of guys would struggle with that kind of size, but for us, it's not a problem at all.
Yeah, in terms of institutional clients, are you seeing them having a particular interest in a specific strategy, or is it more like broad based, just wanting to get general exposure to crypto?
Well, if you need to break it down. So the wholesale, high net worth, family office, advisor space
Mm.
are generally looking at this through getting exposure, and they're engaged now. So everyone has exposure, or they're looking to gain exposure, and they have beta exposure, they have venture exposure. You know, but the big end of town, like the institutions, the tens and hundreds of billion institutions, they're investigating the space, they're
Mm.
building their teams, but they don't have exposure on directional yet. But they have a lot of exposure via their PE and VC books.
Yeah.
Okay.
So and you can't not have exposure because most of the money in venture capital has gone into the technology sector over the last few years.
Mm.
And so if you've got exposure in private assets or PE, VC, you have exposure to crypto.
Mm.
But those guys don't have directional yet.
Mm.
And that's a function of one, they're upskilling because they don't feel they have enough knowledge of that space yet to be able to invest, and they're aggressively upskilling and building teams. And I'm doing so many teach-ins to large institutions, like numerous teach-ins per week, where I'm going in and saying this, and answering questions about the space and how they should engage. And then the other reason is about the regulation. So one is about they don't feel they have the skill set yet, but they're solving that. The second is they're waiting for regulation
Okay.
to come, and whereas you don't need that for the family offices and the like. And so when the regulation becomes clearer, which we are getting much more clarity around regulation, that will then open the floodgates to institutional flow, which will be game changer for this market.
And funny, I was actually going to ask you about whether or not you are sort of forming partnerships with some of the instos where you do sort of educate them a little bit. What sort of questions are they asking you? Are they sort of starting from the real basics, or you feel like some of them are really technical now and up with the latest trends and the
Well, the
latest?
funny thing is, they're all building teams. They're pulling together teams. They're hiring some. So teams have generally got some tech guys who have moved out of their IT areas in,
Okay.
and they've got some investment staff who are either working on digital assets full time, or they're working on it, part time alongside other jobs.
Yep.
But generally, the when you engage with the teams, they generally have a few people who are very crypto friendly and skilled, kind of like yourself, who have traded PA,
Mm.
who want to be involved in the space, and then you have the older heads who need a little bit more,
That's me.
education. So it's sometimes you go and you start at what is blockchain,
Yeah, right.
and then you go all the way through to how to invest in the space. Or sometimes people want to talk about the idiosyncrasies of individual coins.
Yeah, okay.
And so it's really like every time you go into an institution or advisor or researcher, it's a different meeting.
Okay.
So I just like to go in with a whiteboard. I say, just give me 2 hours, give us a whiteboard and just throw questions at me.
Yeah, nice.
And so numerous of these guys, we do it like once every 2 or 3 months, where I'll go in and just do upskilling sessions. And I do that because one, I strongly believe in the space, but two, it builds relationships. Hopefully, people understand that, my whole career is around defensiveness, is about process, transparency, doing what you say you're going to do.
Mm.
And so hopefully when they get to a point where they want to invest in the space or feel they can invest in the space, that hopefully we'll be one of their partners. So we're willing to put the time and effort in now to upskill people with a long-term view. And that's something that Trovio gives us as well. It gives us an ability to spend time, engage with clients, because we don't need to monetize a client immediately, because we have other parts of the business that, that are incredibly strong and do that. So the assets management side for us is much more of a build. It's a long-term structural build where we want to bring in institutional clients.
Okay. And just before we move on, if anyone watching this podcast did want to sort of reach out to you and maybe get an information session,
Yeah.
what's the best way for them to do that?
They can come. They can go to the Trovio website. Just
Okay.
call up one of our client. Johnny Caldwell's our head of sales. We've got numerous investor relations and sales guys around. Just reach out to them. We're happy to. We produce a lot of collateral as well. So there was a Bitcoin halving piece that came out last week.
Okay.
So every week we're putting out weeklies, monthlies, thought leadership pieces. So we're happy to engage with anyone who wants to work in the space.
Okay.
We're trying to build a community around our company as well,
Okay.
where people hopefully get value from us, but value from each other. So we will do a lot of, joint client events where we'll have people around, where we'll present, but everyone will mingle and talk and, discuss ways they're approaching the space. We're really trying to build a whole community around what we're trying to do.
Fantastic. Okay, so I guess you sort of touched on earlier that crypto can be very volatile.
Mm.
So if you are an investor looking to add crypto to your portfolio, where would you sort of see it fitting into, say, a diversified portfolio?
Yeah. So there's two aspects. There's one is digital assets as an investment case,
Mm.
and the second one is tokenization.
Right.
So we'll take the first one. So we got MIT to write a paper about the amount of digital assets that would work in a portfolio. Obviously, because the thing of the space is it's very new, it's an emerging ecosystem, so therefore it brings a lot of volatility. Now, vol for me is a good thing because it means I need to invest less. It's like a call option.
Yeah.
I can put a small amount in, but have a potentially large return. So for me, that works incredibly well. So vol scares some people away, but I would always look for high vol assets over low vol assets because they're much more efficient when you're building portfolios.
Mm.
So if we just look, since Bitcoin was invented, established, however you want to term it, it's done about 200% per year. Now,
Wow.
it's also had massive drawdowns. We've just come through the bottom of one of them where it's drawn down like 70, 80% numerous times. So you have to be able to take the volatility.
Mm.
But because it generates a positive return over the medium term, it is beneficial to a broader diversified portfolio. Numerous people have investigated the space and have done, the analysis on what weighting should be used, but generally the weighting people are coming into is somewhere between 3 and 5% of a portfolio
Okay.
in digital assets as an investment case. Now, way I approach it is most portfolios rebalance. If you have an equity weight, a bond weight, a property weight, if something drifts, you have a rebalance policy to bring it back. I would argue that in a space which is emerging, that you don't want a rebalance policy. Because if you've got 3 to 5% and then it could double in a month, well, then and so your 3 to 5% has gone up to 10%, well, then you sell it down. So you're constantly locking in those gains, but you don't get exposure to the big moves. And for an emerging ecosystem, you want exposure to the big moves because it could be life changing. So the way I approach it personally, and the way I recommend to people to approach it, is put a small amount away and close your eyes and don't ever look at it.
Yeah,
Don't touch it. And it'll go up and it'll come down. It'll bring volatility. And if you size it correctly, the vol is manageable for your portfolio. But over time, you can imagine if you put 3% in, over time, years, that it might be worth 20% or 30%. But if you're constantly top slicing it to
yeah.
keep it at that 3%, you don't get the benefit of the big move.
Mm.
Now, I can understand when you've got bonds and equities, the rebalance policies are crucial. But for an emerging asset class, I would recommend you don't rebalance. You put a small amount away that you're comfortable with, and ultimately, what's the risk reward of these things? I mean, Bitcoin could, it could go to zero. I'd be very surprised, but it has a use case, which if it was to go, it could go down to say 10,000, yeah, but it could also go up to 100,000, and that could happen in the next month.
Mm.
So the asymmetry of returns means that, I would argue you need to be involved in the space.
Mm.
It's like a call option. You can make, 5x relative to losing it. It's exactly the same as a call option. So I would recommend put a small amount in, close your eyes, don't look at it on a daily basis, and just let it compound. But you need to, again, because of the network effect, just buying Bitcoin or Ethereum or one of the smaller coins and just holding it, that brings inherent risk as well. About, do you have it on a ledger? Do you have it on exchange? And then you have the problems around, FTX, etc. So if you hold on exchange, you're at risk. If you take it off exchange and hold it in cold storage, you're on a ledger, which is good. But where does that ledger sit? Do you keep it in a desk? Do you keep it at home? Do you keep it in a safe? If your house burns down, what happens to that? So is it fireproof safe? And then what happens also if, Bitcoin's different because it has dual utility. But what happens if an Ethereum killer comes out of nowhere and takes all the value from Ethereum, and you've just bought Ethereum?
Yeah, right.
Yeah, you've got a problem. So I would argue that for us, it's like that's why we have a systematic beta fund. The alpha, the value we bring is twofold. One is about how we build the portfolio in terms of if we look for the largest coins, and then we're rerunning the process weekly and constantly moving coins in and out. So we make sure we have the right portfolio. But secondly, half of our value is around the operational side.
Right.
Cold storage at Coinbase, how we trade. We don't trade hot exchange, so we don't move money onto exchange. We trade in credit, and then so things come out cold storage and straight back into cold storage. So a lot of our time and effort is about building the best operational infrastructure we possibly can. And when I speak to clients, I very rarely, I don't ever like to do meetings trying to convince someone to buy the asset class, because a lot of people are very vocal about, it's a scam, or it's for thieves, or it's for money laundering, or all these kind of things. Well, if that's your view, that's your view. You're entitled to your view. I'm not going to try and change your view. But if you want to invest in the asset class, well, let me talk to you about how we invest, how we think you should do your operational side, how you should pick your coins. If you like the asset class, we want to engage and help you get the best exposure you can. But my job is not to convince people that it's an asset class you should invest in.
Yeah.
Like, I think everyone needs to make up their own mind. And if you want to invest in the asset class, well, please come and talk to us and we can help you do that. But I don't want to get into, because people get very, very animated about the space. And the funny thing is, people often say to me, well, like, what show me a use case for Bitcoin? I've never seen one. Well, the equivalent of the DVLA, the driver licensing in California is putting driving licenses on blockchain now as NFT. So there's you can tokenize, decarbonisation, the move to net zero in the world wouldn't exist without blockchains.
Really?
Yeah,
Wow.
because I'll talk about that in a minute. But if there's so many use cases, and the technology is market changing, that you can't argue with it. People say, well, what's Ethereum ever done? Well, it's like, you can't get upset about Ethereum. It's just technology. It's like getting upset about your iPhone or getting upset about your Alexa. I mean, it's just technology.
Yeah.
You can't get upset with technology. Now, you can have an issue about Bitcoin as a store of value. You can say, well, actually, it's not going to replace gold. And you're entitled to that view. I believe it will. And I believe it's just digital gold. And Bitcoin has a store of value because it's a social construct which we give it. We give Bitcoin that social construct the same way we give gold the store of value. Yeah. So, but you can argue about that store of value for Bitcoin, but you can't argue about Ethereum. It's a smart contracting solution. Like ultimately, in the future, when you buy a car and you change title on the car things, all of those things will sit on Ethereum or another smart contracting solution. You buy a house, you do KYC, AML, it'll all be on blockchain.
Yeah, right.
Yeah, all the technology, you can't argue with it, but you can argue with the social construct. But people just get very animated. And after doing hundreds of these, I try not to do meetings where I have to argue the benefits of investing in the asset class. I'd rather just talk to people who want to invest in the asset class and then help them to do that.
Yeah.
Because it's not a good use of my time or anyone's time having a big argument about with the space.
Yeah. I'll probably throw it to you in a second, but I did just want to ask one final question on that portfolio construction piece. So, I mean, you come from, I guess, the background of Pendle, where bonds were the defensive asset class, right? And they were a defensive component of your portfolio. Do you see that 3%, let's say, allocation in a multi-asset portfolio being a growth alternatives allocation, or actually an alternative defensive allocation?
Oh, it's growth.
Okay.
So it's definitely growth. It's a return stream that you can build into anywhere. It's a new asset class.
Okay.
So you should, like the same way you have Aussie equities, international equities, property, all these kind of things. You should have a bucket for digital assets.
Okay.
It's a growth asset without question. Now you can utilize it over the medium term, and it can have defensive characteristics. But at certain points, it will have defensive characteristics. But I would argue that when you're building a portfolio, you just put it out growth assets. Yeah.
Thank you.
So for institutional investors who are, interested in gaining direct exposure to crypto assets, how should they think about custody of these assets?
As safe as you can. The key thing is if you want to buy, if you want to play around the space and you want to put a couple of grand in, you'll buy some Bitcoin on Kraken or Binance or whoever. You can leave it on exchange. I'd argue you probably shouldn't, but if it's a couple of grand, whatever. If you buy more, you should probably put it in cold storage on a nano ledger or one of those kind of cold storage options. Leave it in your desk again, but then you're exposed to forgetting your access codes, forgetting or the house burning down or something, or losing the nano ledger. For the institutions, they can't do that. Institutions need safe custody. Now, the regulations are changing to, certainly around qualified custody agents and things in the US, but we use Coinbase. It's NASDAQ listed. It's the largest storage entity, custody entity in this space, and it's the best. And so we just hold everything in cold storage, which we're able to at Coinbase. So generally, when we run the exclusion list, we have to be able to hold it in cold storage.
Okay.
If we can't, there are very, very few exceptions to that, and it's not exclusive, but we generally only own assets which we can hold in cold storage. As I mentioned, it's like, and then when you trade them, well, generally you trade, comes out of cold storage, comes on exchange, you do your exchange and you put it back in cold storage, or you can actually trade a credit. So Coinbase will offer you credit, so you can do your trades and then it comes out straight back in.
Yeah.
And so it's just making sure that you have the safest possible custody you can get. And so there's this old phrase in the markets like, if you're not your keys, not your coins. You need to actually own them. And I think that's very fair. But when you're a big institution, you need to trust someone to do that for you. And that's where we spend so much of our time and effort by engaging the best counterparties we possibly can and bring in that lens about, because the space is emerging. You look at FTX. FTX thought they were the smartest guys in the room. We all thought they were as well, but they had no traditional finance knowledge, and all the problems they had, all the problems with free arrows and all the problems, they're TradFi problems, over leverage and fraud. These are not digital assets issues. These are very, very old fraud. Let's say like Madoff was. And if you bring a traditional finance lens about collateral management and custody and these kind of things, which people have got generations of knowledge in, and bring that to the new space, you can engage in this space safely. But you need to find the right partners and understand what they're trying to do.
And maybe just quickly on FTX, did Trovio look at those guys? Did you have a view on them?
Oh, we used them as an exchange, as everyone
Okay.
else did in the world.
Yeah.
Like they, and the reason everyone else used them exchange is their pricing was the best.
Okay.
And the reason their pricing was the best is because they were losing money in Alameda.
Yeah, right.
And so they were making ridiculous prices all day long, and everyone used them because their pricing was so much better than every other exchange out there.
Okay.
But the reason they were doing it, their pricing was good because they were large. I mean, the level of incompetence was is just breathtaking.
Really.
Yeah, like they could have just run if they'd have understood what they were trying to do. They could have just built one of the biggest, most successful and best businesses in the world, but they just blew the whole thing up
Mm.
because they didn't understand basic tenets of leverage, custody, accounting, segregation, all these kind of things, which we all grow up with in the traditional finance
Yep.
world.
Yep.
Yeah, there's no question these guys are smart, but they didn't have a traditional finance training.
Mm.
Yeah.
Were your clients impacted by the FTX collapse?
No, well, we had we had in one of our funds a not so the dynamic the systematic beta fund, which is the digital asset fund, we had no exposure to FTX
Okay.
because literally there was just an exchange. We
Yeah.
held nothing on exchange,
Okay.
so we hold
Yeah.
no assets on exchange at any point.
Okay.
So zero exposure. On the fund, the market neutral fund, we had about 30% of our fund in FTX exposure via different loans and things. As soon as we understood what was happening, we started liquidating that. The guys came in on Sunday and pretty much worked till Wednesday.
Wow.
Stayed in the office, unwinding everything. And I think we had a 3% exposure that we liquidated all our exposure. We had 3% that we was pending transfer out that that got caught in the. So we are part of the administration, but only about 3%, and we're still and that was how to put this largely immaterial to the returns we'd be making.
Yeah.
But if you're a fund, most funds in the world had a large exposure. A lot of guys got wiped out. And that's because it was just if you weren't using FTX, there was something wrong because
Yeah.
they gave you the best prices.
Mm.
It was just having the live exposure of sitting on the exchange, which was the issue.
Are there any other sort of developments aside from regulation that you think are also important, or do you think regulation's like the most important?
I think regulation's the most important, but the second thing is the use case for the space. So you go back 3 to 5 years, people looked at digital assets purely as, it was like a casino, it was a bit of gambling, it was a place you could make large amounts of money very quickly, but it was effectively, an adjunct to it, not an adjunct, but it was divorced from normal finance. Yeah, it was for very well versed tech guys to make money. Now it's mainstream. And the reason it's mainstream is because of decarbonisation and tokenization. So I mentioned earlier that decarb and net zero wouldn't exist without blockchain.
Mm.
And that's because the proof of that you're actually doing something. So
Okay.
if you say we're going to be net zero, if you're a company that says I'm going to be net zero, well, how do you prove that?
Yeah.
Because a lot of companies say this, that this meat is organic, but does anyone ever check that
Exactly.
meat is organic?
How can you tell?
Can you trust them? There was this big scandal back in the UK about 10 years ago about the amount of horse meat that was on a menu that was actually being sold as organic beef.
Really?
Yeah, a huge scandal back in the UK about like the provenance of foods and the labeling of things, and it's all been cleared up. But again, if you're a company that says, we are net zero, well, then the question that people ask is prove it.
Mm.
If you say you're net zero, prove in your annual report or give this the ability to check your net zero.
Mm.
So you need an immutable ledger
Mm.
to prove it. So you need to do two things or three things. One, you need to calculate your liability
Mm.
in carbon, in tons. Two, you need to then offset that liability by going and buying carbon emissions, voluntary carbon emissions offset. You need to retire those emissions, bond it with your liability, and put it on the blockchain. So anyone can look and prove immutably you have done that.
Yeah.
And that exists on a personal level, it exists on a company level, corporate level, exists at a government and supranational level. Everyone has to prove. If you say, I'm going to be net zero, prove you're net zero. And the only way you can do that is by actually going through those steps and put it on a blockchain. Anyone can then go on the blockchain and see, okay, you've actually done that. And without blockchain technology, you wouldn't be able to decarbonize.
Yeah.
So that's one side. So as everyone, there's two massive mega trends in the world right now. One is decarbonisation. The other one is the move from analog to digital, and that's about digital asset tokenization, all this kind of thing. So again, we go back to that world a few years ago, where Bitcoin and Ethereum and all these digital assets were purely punting vehicles, where people made and lost a little money. Now the technology is moving into the mainstream, and it's tokenizing fixed income. So, Goldman's tokenized a green bond for Hong Kong recently.
Okay.
JP Morgan tokenized dollar yen. SocGen have a special dedicated unit called Forge, which is about tokenization.
Okay.
So over time, every asset will be tokenized. Now, and that's why central banks are introducing digital currencies, CBDCs and the like, and that will be completely industry changing, because what it'll enable you to do is rip out all of the old financial infrastructure that's built up over the last 200 years, where you've got every bank having different systems, proprietary systems, and they're all sticky taped together by CEDAW, Euroclear, and
Yeah.
all these different chests and all these different things, that myriad of systems, that they over time they work together but not that efficiently, and there's massive lags in the system. So everyone having their own blockchains, which is then linking via other blockchains. So over the next few generations or years, you'll pull all this old outdated infrastructure out. You'll move to new infrastructure, and the new infrastructure will allow you to get rid of those two. It will allow you to do two things: pull out the middlemen and the rent seekers, and two, speed up the process. You move to atomic settlement of equities or bonds. Instead of buying a bond and waiting 2 days for it to settle, it will settle instantaneously. And also, tokenization means that your ability to build portfolios increases exponentially, because you can buy a slice of anything you want that's been tokenized, and you can buy it instantaneously. And so there's so much happening in this space. And when people say, I don't like digital assets and it's all a scam, well, yeah, if you don't want to buy them, don't buy them. But you can't not engage with tokenization, because it's coming. Like, the way that all of your clients' portfolios, your own portfolios will hold, will change, because the custody options will all change. You have to engage. Like, there's no choice now.
So just on that, I guess that blockchain piece, the tokenization, and I guess if we do move to that, I guess future point where a lot of assets are or maybe all assets are on blockchain, do they need to be on the same blockchain? Can you build blockchains on blockchain?
Yeah, that's the really interesting point, is that you have private blockchains, you have public blockchains, you have thousands of blockchains. You can pick whichever blockchain. At some point you will have your own coin. We'll have a Trovio coin. There'll be a Pendle coin, a US coin. Everyone will have their own coins. You'll probably pay your staff in coins, but that coin will be transferable into the CBDC, one for one.
Yeah, right.
And so, different. So we don't know how this. No one knows how the space is going to evolve. But there'll be numerous different chains. But the great thing is they can all link into each other.
Okay.
So you don't have to have any of your data on a public blockchain. You can have your own private blockchain,
Right.
and then you can use AI. So you can put all your data on a private blockchain, use AI to go and search that blockchain and help you answer queries and produce client reports and things.
Okay.
So the technology is changing so quickly, and you can get whatever you want, however you want it. Yeah, like you can literally pick and choose however you want it. You don't have to say, okay, I'm going to use Ethereum and I'm going to be bounded by that. You can go and build your own blockchain.
Yeah.
Yeah, you can go and launch your own token. It's however you want to do it. It's all there.
Okay, great.
And ultimately, certain things will congregate around certain chains and the like. But technology moves so fast, because you had now you can have NFTs on blockchains via ordinal NFTs on Bitcoin via ordinals.
Yeah.
So the change, the protocols are changing and evolving so much, and different layers are being built, and ultimately you will then be engaging with blockchains, but you won't even know it, because it will just be a digital application on your phone.
Right.
And instead of facing a central registry, you'll be facing a blockchain, but we won't even know it's happened. Yeah.
Okay. And so I guess just then on the whole sort of central bank digital currencies, CBDCs, let's say they do launch a USD coin backed by the Fed. Where does that leave Bitcoin, Ethereum? You know, they're still going to have use cases.
Oh yeah. So a central bank digital currency will enable instantaneous settlement, atomic settlement. So it means that you'll be able to settle your equities or bonds or FX immediately.
Right,
But it doesn't change. But that CBDC isn't a smart contracting solution.
right,
Yeah. So it's not going to replace Ethereum because Ethereum still has a space. Bitcoin has a space as a transfer mechanism, as a trustless peer-to-peer transfer mechanism,
right.
and as a social construct, as a store of gold. Now, a lot of other chains will disappear,
Okay,
and a lot of chains will pop up, but that's the point of an emerging ecosystem.
right,
We don't know where it goes, and central bank digital currencies are like we talked about regulation. Regulation being a necessary but not sufficient condition for adoption.
mm,
Central bank CBDCs are the same.
right. Okay,
Like for this space to move forward, you need CBDCs. You need the authorities to be engaged in the space, and you're seeing that pretty much every central bank in the world is working on a CBDC project now, or already have a CBDC.
There's obviously a lot happening in the crypto space, both on the regulatory front, on the technological development front. What do you sort of see as the big and important themes to monitor over the next few years for crypto?
Again, it's just tokenization. So, so the world was. I mentioned the megatrend, decarbonisation and digitization of the world. Everyone was focusing on digital assets as an investment class. Now, those people are thinking about tokenization of existing assets. So I think that's where most of the time and effort will be, and everyone's running projects. We're working with numerous companies on tokenizing assets, running proof of concepts, and working with companies about ways they can engage and they can tokenize their assets. And then, or if assets are tokenized, well, how do they own them? How do they custody them? Generally, that whole conversation moves between tokenized assets and decarbonisation. The people want it all together. And so I think the space is just accelerating. People who didn't like it a few years ago have no choice but to be involved now because they need a decarb solution and they need some sort of tokenization solution. You can't not have a plan around decarbonisation.
Yeah, very interesting.
yeah, fantastic, fantastic. I think we might leave it there, but I just want to say, Wimble, thank you so much for your
Yeah,
time.
thank
It's
you.
been
No, my pleasure, guys, always.
a great
And
conversation.
I'd love to continue the conversation. If anyone does want to learn more, they
Yep,
can just come onto our website. I mentioned lots of thought leadership pieces there. If they want teachings as well, please just reach out to us.
brilliant, brilliant. Thanks so much.
Thanks.
Thanks for your time.
Thank you.